Okay, that sounds
Recording.
good. Perfect. Thank you. So, hi everyone. This is the second part of the workshop today, the online workshop that we have as part of Canada101. Thank you again for coming here today. Again, my name is Miriam Lazarte. I'm the CEO of LatAm Startups. And in this second workshop, we are going to talk about incorporation in Canada. So we have our dear partners of OCL Law with us today, helping us with this presentation. And once again, I would like to thank you, all our partners, Bright Immigration, OCL Law, the City of Toronto, Startup here, Toronto, and as well from Peru for supporting the Canada101 online bootcamp. So we are going to start. I would like to introduce Alan Ociel, who is the CEO of OCL Law, and he's going to talk a little bit more about the company, and we'll start the presentation today about incorporation. Thank you. Alan, all yours.
Thank you so much, Miriam. I guess it's an afternoon. Good afternoon to everybody today. I think the first thing that I want to say is that our relationship with LatAm Startups has become one of the most important relationships that we have going in our law firm. We cherish it very much. We've met incredible people from all over Latin America, and we've gotten to work with really amazing clients as a result of the relationship with Miriam, with Perla, and with the rest of LatAm Startups. We're learning a lot about, me personally, I'm learning a lot about the different cultures in Latin America, both from a couple lawyers who you'll meet today that work with us at our law firm, and also from our relationship that we have here. Our law firm, OCL Law, is a business and technology law firm. We specialize in taking innovative companies from the startup phase all the way to even a potential exit, whether it's through a merger and acquisition or going public. We deal with corporate raises, and another area that we deal with is the immigration program called Startup Visa. So we deal with the corporate side of the Startup Visa program, working with clients, including through LatAm Startups. Today, we're going to be doing a presentation more on the incorporation side, how to incorporate, how to start a business in Canada. And to get started on that presentation, I want to introduce you to two amazing lawyers at our law firm, Tassiane Gosler and Maria Susana Bastidas. Tassiane is a Brazilian lawyer who is now going through her equivalency in Ontario. Maria Susana is an Ecuadorian lawyer who is also going through her equivalency in Ontario. So I'm going to have both of them give the presentation directly to you guys. In the past, we've gotten great feedback from the LatAm Startups cohort on how helpful it was. So hopefully you guys find it helpful. And after the presentation, if you have any questions that are specific to your business and your specific needs, please feel free to reach out to us directly, and we'll be happy to chat with you after the call as well. Okay, I'll give it over to Tassiane and Maria.
Good. Hi everyone, Tassiane here. I'm just gonna share my screen so you can see our presentation as well. I hope it looks good to all of you and you can see it.
Yes, all good.
Okay, perfect. So as Alan mentioned, we're going to be talking about incorporating in Canada today. This is us, and Alan just gave a quick introduction about our firm and how we work. So I'm just going to skip this part too. And what we're going to discuss today is essentially some things that you need to take into consideration when you're incorporated here in Canada. So the topics we will discuss is the first thing, which is determining your purpose for doing business in Canada. This is the first consideration you should have, and this will let us know what is the best strategy and what are the structures that are available for you. And then we will be talking about incorporating a company in Canada, and some considerations for the Startup Visa immigration program. I know that you had an earlier immigration session that probably covered that a lot better, and we're not immigration lawyers, but we just want to explain to you how that works in terms of the corporate aspects of this immigration program, and some considerations you need to have when you're incorporated if you think that this is a program that it's suited for you and that you think you may be applying for this. So to start, we wanted to discuss with you the first step, which is determining your purpose for doing business in Canada. And from our experience in working with international startup companies, we noticed that it's usually one of those two situations. So you could be expanding a business that you have in your home country that it's already established, or maybe it's already established in other different countries, and now you think it's time to expand this to Canada. Or I should also say to the North American market, because I know that a lot of companies will use Canada as the entry point for you to maybe go to and sell or start to provide services to the US as well. So that's one option. And the other option would be when you're creating a new and an innovative business here in Canada. So the business is actually starting here in Canada and may expand to different countries after that. And another situation that we usually see is when you have an established business in your home country, and then when you decide to come to Canada, you notice that you're going to need some adjustments to the product that you have, or to the services that you provide, to the model that you have, or maybe you have a range of services or products and you see that not all of those would be applicable to the Canadian market. So you want to open a company here or start to do business here with a few differences than the business that you already have. So that would be a mix between both. So you're expanding, but at the same time, here in Canada, you're creating a new and an innovative business. Another thing that we take into consideration is if you plan to apply under an immigration program when you're coming here. So if besides doing this expansion, you also think you have a personal intent on moving to Canada and applying under an immigration program here, there are some specific considerations and structures for the business that you need to keep in mind. And this includes the startup visa program that will require a specific type of structure for your business. And we are going to cover that at the end of this presentation, just talking a little bit about ownership requirements and things that you should pay attention to. Right now, I just wanted to highlight that this is one of the factors that you have to think about, regardless of the option that you're doing, if you're expanding or if you're creating a new business here. So the first option, like we were talking about, is to expand your business to the Canadian market. If this is the situation for you, you have three options for you to move forward and start operating here. The first one is to register a Canadian branch, which is really an extension of the business that you already have in your home country. And basically, you're requiring a permit for you to operate in Canada to sell your products. And this concept of operating or doing business in Canada or in specific provinces of Canada is a concept that changes depending on the province that you're planning to operate. So it's important for you to think about the provinces that you're interested in seeing, what are their regulations and what they considered doing business in that province, to see if you need a registration there or not. So in some provinces, you will need, if you have an office there or if you're hiring employees there, that requires a registration. For others, that may be different. So that's one thing for you to take into account. The second option is to incorporate a Canadian subsidiary here in Canada. Through this option, you're really creating a new entity, which is a corporation in Canada. And this entity is going to be controlled by the foreign entity that you already have. So if you already have a business in Brazil, and most of my examples are from Brazil because I'm from there. If you already have a business there and then you want to incorporate a subsidiary here, that's going to be controlled by the company that you have in Brazil. The third option, which is a bit less common, is for you to incorporate an affiliate or a related company in Canada. This type of company is also a separate entity here in Canada. The difference is that it's not going to be controlled by the company you have in your home country. This is going to be controlled by the same people that control your foreign company. So it has common ownership and common control. This may be the more appropriate structure for some immigration programs like startup visa, but it also depends on your situation and what really works best for you in this case. So one question that usually comes up when we're talking about this is, which one is the best one for me? Should I create a branch? Should I create a subsidiary? And fortunately, there's no right answer that is useful for everyone. It's really dependent on the type of company that you have, your type of business, the country that you're coming from. But essentially, we can highlight some of the advantages and disadvantages for each of them. For the branch, which, like we said before, it's really an extension of the foreign company business. One of the main advantages is that you don't have to incorporate here in Canada. And because you are not incorporating, you're not creating a new entity, you don't have all of those annual maintenance requirements, like annual meetings, annual filings that you have to do with the corporate bodies and with the CRA here in Canada, the Revenue Agency for Taxes. And this, because I said, is because you're still operating under your foreign company, but you just have a permit to apply to operate in the provinces that you are doing business in Canada. Another advantage that you would have with the branch is that you could apply losses that you have here in Canada to your foreign entity. And this again, because essentially we're talking about the same company. So usually the first year that you're going to have with the new business may not be as profitable because you're having more expenses with advertising your product, creating your customer base here. So all of those losses you could apply to the entity that you have in your home country. This would also depend on the existence of tax treaties that may exist between Canada and your home country, but could be one of the advantages of having a branch. Another thing that is an advantage is that if you pay Canadian taxes, you would be able to deduct those. Also depends on the treaty existent between Canada and your home country, and depends on your specific situation, but it's usually one of the advantages as well. As some disadvantages for the branch, I think that one of the main issues is that because you're not having a separate entity, you're still operating under your foreign company here. The foreign company will be responsible for any legal issues that may arise in Canada. So if you have a problem that arises here in Canada and it was created by the branch, the company that you have in your home country may be responsible for those. Another thing to take into consideration is that you will be required to designate an agent for service that is resident here in Canada. You cannot issue equity in the branch because, again, this is not a new entity. You are only referring to the company that you have in your home country. There is this additional branch profit tax in the amount of 25%. Also depends on any tax treaty between your home country and Canada to see how that would work. It depends on taxes that you pay in your home country as well, and cannot be used for some immigration programs, like, for example, startup visa. You're not able to start a startup visa application if you only have a branch here in Canada. You need an actual entity that is done through a subsidiary. Talking about the subsidiary, some of the advantages I think one of the main ones is that you have limited liability. So the assets of your foreign company, they will not be exposed to creditors or to issues that arise here in the Canadian subsidiary because it's a different entity and they have this separation. Another potential advantage is that you can issue equity in the Canadian corporation. So if you want to compensate maybe employees or advisors here in Canada with shares of your corporation to give them this extra incentive to work for you, you can issue equity from the Canadian corporation that you created here without necessarily affecting the foreign company that you have in your home country. It's easier for you, and most grants and subsidies from the Canadian government require the existence of company incorporated in Canada. So that's another advantage of creating a subsidiary here. If you are looking for government funding and to apply under some of the innovation and loan programs developed by the federal and the provincial Canadian government, usually you will need a subsidiary as well. There's no branch profit tax. And some of the disadvantages is that because you need to actually incorporate this business and create it from scratch, it's going to be more costly in the beginning just for you to start with incorporation. And annually, you're going to have to observe some legal corporate requirements. You're going to have to file your taxes because it's an entity in Canada that is going to be resident in Canada. You're going to have annual meetings. Depending on where you incorporated, you're going to have to file some annual returns as well. And another potential disadvantage is that you cannot take advantage of foreign tax credits. So those taxes that you pay here in Canada for the Canadian subsidiary, you can apply those only limited to the existence of this Canadian subsidiary. You're not able to take those taxes and receive a deduction in your home country. So these are just an overview of some of the advantages, disadvantages, but like I said before, it really depends on the structure of your business, how you're coming here, the country that you're coming from, for you to establish which one of those is the best option for you.
And
third, yes.
Sorry, there are some questions about this topic.
Perfect.
Did you like to address them now or at the end?
Sure. I don't see the, oh, I see the chat. Perfect.
Yeah.
So is intercompany transfer possible in branch or subsidiary? So this, I think you're relating to the immigration programs that you probably talked about earlier. As far as I know, you need the subsidiary for you to start working with those programs. Alan and Marie-Sue, if you want to jump in.
So just to be clear, I think you need a company as opposed to a branch. You need to have a Canadian company, but it doesn't necessarily have to be a subsidiary of the foreign company. A subsidiary means, like the implication with the subsidiary is that the foreign company, sorry, I realized I don't have my video on, hold on. The foreign company owns all of the shares of the Canadian company. That's not necessarily, from our understanding, even though we don't practice immigration law, that's not necessarily what's required. It could have common ownership. So if the owners of the, let's say, Mexican company, as an example, are the same owners of the Canadian company, that could, from our understanding and from the work that we've done with companies that do intercompany transfer, still satisfy the requirements of intercompany transfer. So the word subsidiary means that it's owned by the foreign company, that it sits under it in the corporate tree, so to speak. But what we're really saying is you need to have a separate business in Canada in order to have intercompany transfer. Okay, there's also a question here about the Canadian citizen requirement. I think Tatiana and Maria are going to talk about what we call the residency, director residency requirement. So they will talk about that. And the only other point that I think we'll mention is that there are some tax advantages to having a Canadian controlled private corporation. So if you are not a Canadian and you are the owner of a business in Canada, you may not benefit from the tax advantages of having a Canadian controlled private corporation. And I know that one of the other seminars or webinars that will happen will relate to more of the accounting and tax side. But those are the two main things. There's a director residency requirement that Tassia and Maria will talk about in a tiny bit. And then there's the ownership of the company. Okay, so
I think that, Alan, also there is a question that it was previous to all of them. Creating a holding company in Canada is not an option.
So a holding company, again, usually just implies that it doesn't have operations on its own and that it's just an entity that's created to own shares or to own assets of something. So if there's not like a separate type of corporation called a holding company, a holding company just more so refers to what you plan on doing with your corporation, whether you plan on operating or whether you plan on just holding shares. So you could technically create a Canadian corporation that then becomes the owner of your foreign company. That's possible. And in that sense, it would be what we call a parent company. So it sits at the top of the corporate tree. But if you have operations in Canada that you operate out of your Canadian company, then I wouldn't categorize it as a holding company per se, because it's still an operating company. It would just be more so the parent company that owns the foreign company. So again, the holding company is usually just a type of company that's created just to hold assets or for specific like tax planning purposes. It's not a type of company.
Thank you guys.
Okay, and just to clarify the question from Praneet, the branch doesn't need the Canadian citizen or Canadian resident in the form of a director, but you need someone that is resident in Canada just to be an agent and to receive to be served on behalf of the foreign company. So you need someone that has an address in Canada. Doesn't need to be one of the key persons of this company. There are actually some services online that you can hire someone just to have that address for your company that they're going to receive, going to be served on behalf of the foreign company for you. But it doesn't have to be a director or anything like that. That requirement that we're going to talk, I think Maria is going to talk in the later slides, is only when you're creating a company here in Canada. That could be a subsidiary, or it could be this other option that I'm going to talk about now, which is the affiliated or related company, which is not so common, but it's also possible for you to have a new company here in Canada that has common ownership with the company that you have abroad. So the key people in the Canadian company and in the Latin American or foreign company should be the same. And this is the scenario that, as Alan mentioned before, may be appropriate for intra-company transfer or for startup visa, because this creates a connection between the two companies, but it doesn't mean that one is the owner of the other like we do with the subsidiaries. So that's usually the main difference. And you're going to see later, we're going to talk about startup visa specifically. Just for you to understand why we're talking about this now, for startup visa, you need to be the person that is applying under the startup visa program needs to be the owner of those shares of the company, needs to control the company. So that may be a good option if you're thinking about applying for those immigration programs as well. And Mauricio will talk now about option 2, which is creating a new and innovative business in Canada.
Yeah, thank you, T. So as T was mentioning before, when coming into Canada, you can do it through 2 different options. The first one that she already addressed is expanding your business in the Canadian market through a way of registering a branch, incorporating a Canadian subsidiary, or incorporating an affiliated or related company. This second option that we're going to talk about right now is to incorporate a new and innovative business here in Canada. And just to clarify, we do want to say it again, that you must incorporate whether you are expanding by way of a subsidiary or if you intend to create a new business here in Canada. You must undergo through the incorporation process. Yeah, so this slide is just a basic summary of what we're going to be addressing right now in this second part of the presentation. We're going to be talking about the benefits of incorporating. Then I'm going to explain where you should incorporate, taking into account the director residency requirement that was mentioned earlier. We're going to talk about these, where you should incorporate, whether you have a Canadian director or if you don't have a Canadian director. We're also going to talk about how to incorporate, and I'm going to walk you through the steps in the process. I'm also going to briefly explain what's the minute book and why this legal requirement must be observed by every company in Canada. I will then just touch very briefly on how to organize your corporation, and T is going to finalize by explaining the insights of the Startup Visa program from the corporate law perspective. So we're going to start with the benefits of incorporating. And the first one is limited liability. And I think that T already addressed this. This basically means that a corporation is a separate legal entity and exists apart from its shareholders and those who operate the business. So basically that means that as a general rule, the shareholders, the directors and officers of the corporation are not responsible for the corporation's debts and obligations. I'm saying as a general rule because there are many exceptions to these rules in which the directors and the officers do need to respond for their actions in the corporation. The second benefit is a defined and transferable ownership. What this means is that equity or ownership of the business can be issued as a general rule freely to new shareholders. I'm saying again, as a general rule, you'll see that in the legal field, there are many general rules, but there are also many exceptions. And this is the case as well, because there are many exceptions such as shareholders agreement in which you can limit share transfer and shareholders can reach an agreement and say, okay, you cannot transfer your shares unless we all approve. So as a general rule, shares and ownership of the business are going to be freely transferable, but there are exceptions. The third benefit that is very attractive is related with taxes. Corporations in Canada are taxed separately from their owners, and this is also the case in Latin America. Just because the corporate tax is generally lower than the individual tax rate, incorporating your business can offer you several fiscal advantages. I'm not going to dive into the complexities of the taxation situation in your specific case, but you should talk to your accountant, or we are aware that you're having a tax seminar as well for them to give you more insights on this. The fourth benefit is perpetual succession. And that means that your corporation is going to continue to exist even if every shareholder and every director were to die. And in these circumstances, what happens is ownership of the corporation would simply transfer to the shareholders' heirs, and directors and officers can be easily replaced. This just provides greater stability that allows your corporation to plan over a longer term, and it also helps in obtaining more favorable financing. The last point that is mentioned in this slide is raising capital. Why is it so important to incorporate? is just because you can encourage investors to give you money in exchange for equity or shares in the company. This is an additional incentive than just asking for money without being able to give something back, such as dividends that you can give back through the corporation. And one benefit that is not mentioned here, but T already mentioned, is that if you incorporate, you can have a better access to grants. Corporations in Canada have access to capital and grants from both the federal and the provincial governments, but the applicants must be corporations. So this is just one more reason why you should incorporate in Canada. One thing to note before we move on is that in Canada, corporation is the most common legal institution. The majority of provinces only have one type of for-profit corporation, and this is unlike Latin America, and I'm just going to talk from my experience in Latin America, in where we have a lot of many different types of companies. We have Sociedad Anónima, Responsabilidad Limitada, whereas in Canada, we just have one, well, in most provinces, we have only one type of for-profit corporation. So that just makes things easier. Now we're gonna talk about where to incorporate. And we usually get a lot of questions in this slide. We're gonna talk mainly about the director residency requirement. What is this? Whether you incorporate under Canadian or Ontario law, at least there's a legal requirement that at least 25% of the directors of the corporation must be resident Canadian or Canadian citizens. That means that if you have fewer than 4 directors, at least one of them must be a resident Canadian. So from our experience, we get a lot of clients that want to incorporate in Canada and don't have a Canadian director. None of them, they're all foreigners, none of them is a permanent resident here. What to do? We offer the option to incorporate under British Columbia law, just because under the legal requirements of this province, they do not require directors to be resident Canadians or Canadian citizens. So this would be a good option if you don't have a Canadian director. You can easily incorporate in British Columbia. But even if you do have a Canadian director, it's still important to factor in where you plan on doing business. As T said, this is very context specific depending on your case and what is doing business. Doing business is defined differently in each province, but we typically tell our clients that if you're establishing a location, the head office of your company is going to be in a province, you're hiring employees in that province, you're advertising, you are providing goods and services in that province, then you're doing business, right? So you have 2 options here. I'm just going to talk about 2 options right now. You can either incorporate federally at a federal level, or you can incorporate at a provincial level. And there are some advantages and disadvantages. And I'm just going to mention, I'm quickly going to mention just 3 differences between both systems. If you incorporate at a federal level, then your name is going to get approved by the regulators and you're going to be protected. That name, your corporation's name, is going to be protected for national use. That means that a corporation that wants to have your name or a very similar name to your corporation's name is not going to be able to incorporate under that name. Whereas if you incorporate at a provincial level, names are approved for provincial use only. That means that somebody in a different province could be using the same exact name, and that would be okay. Another difference is that if you incorporate at a federal level, you have additional corporate requirements. For example, you need to file an annual return to maintain an active status. You need to prepare several different registers showing who are the individuals behind the corporation, who has significant control over the corporation. Whereas if you incorporate at a provincial level, you do not need to, you do not need to, you don't need to fill out this annual return, but only a notice of change to alert the ministry of certain changes, and you don't need this register either. I think that the biggest difference, and probably this is what is going to determine whether you incorporate at a federal or provincial level, is that if you incorporate at a federal level, it's going to be easier to register to do business in multiple provinces. Whereas if you incorporate at a provincial level, it's going to be more costly to do business in different provinces, as you need to extra provincially register to operate in different provinces. So I think that the main question that you need to ask yourself before incorporating is, where do you plan on doing business? So for example, if you are having the head office here in Ontario, but you're hiring employees from Quebec and you're going to provide goods and services to customers in British Columbia and throughout Canada, let's say, then we would suggest you to incorporate at a federal level, just because it would be easier to register under different provinces. This slide here, we're going to talk about how to incorporate, and no, the previous one, please, sorry. And I'm just going to mention very quickly how to go through this process. And if you incorporate federally or in Ontario, you're going to need to file the articles of incorporation. The articles of incorporation are basically the Bible of your corporation. This document contains the most important information that you are going to share with the regulators. For example, the name of your company, where is the head office, the initial directors, the classes of shares. They're also going to contain if there are any restriction on transfer of shares, or any restrictions on the business activities that the corporation can engage in. So if you incorporate at a federal or Ontario level, you're going to have to file these articles of incorporation with the regulators, and then they're going to approve, and basically that's it. You have been incorporated and you have a Canadian business. Whereas if you incorporate in British Columbia, let's say, because you don't have a Canadian director, then there are some additional steps that we need to fulfill in order to get you incorporated. Not only we need to file the articles of incorporation, but we also need to file an incorporation agreement. This is basically a document in which a person, an incorporator, agrees to take a specific amount of shares of the corporation. And one important aspect in British Columbia is that you need to have an office in BC. So what to do, for example, if you don't have a Canadian director and you want to incorporate in British Columbia, but you're going to operate from Toronto? What we suggest our clients to do is to hire a virtual office service. You can find this online very easily. What this allows you is to use that address in BC, not only to incorporate, but also to receive mail notifications from regulators. And this service is so advanced that it also includes, they receive the mail, they scan it for you, and they send it to you to your office in Toronto. So this is a way in which we can solve this small requirement of having an office in BC. Now we're going to move on to the minute book or corporate records of the corporation. Every corporation in Canada, there's a legal requirement that you must maintain corporate records at all times during the existence of the corporation. What are the minute books? In Spanish, they're called libros sociales, but basically they are the documents that describe the operations of the company, how the company manages itself. For example, it includes the articles of incorporation, the bylaws that are going to be a day-to-day guideline on how to manage the corporation. It's going to specify how to call meetings, for example, who can execute documents on behalf of the corporation, who are the officers. In the minute books, you also include the shareholder agreement, if there's one. You include the shareholders' registers and ledgers. And this is basically a document that is going to show you a picture of who is managing the company, who are the directors, who are the officers, who are the shareholders, has there been any transfer that you need to be aware of. So the registers and ledgers will provide all of this information. So just to make it clear, this is a legal requirement and you need to have maintained at all times a minute book at the head office of the corporation, or you can maintain it elsewhere. It doesn't really matter where, but you need to have the minute book. In the next slide, we're going to talk about organizing the corporation. And I'm just going to mention briefly some concepts that you need to have very clear before you incorporate as well. And this is who are the directors, the officers, and the shareholders. We get a lot of clients, and from personal experience too, that confuse the terms and the services that directors and officers provide in a company. So we just want to make it clear right now. So I'm going to explain. The directors are the responsible people for supervising the activities of the corporation and for making decisions regarding those activities. They are not going to manage the day-to-day operations of the company because that's the job of the officers, but they are going to supervise at a high level the activities of the corporation, and they're also going to take important decisions on behalf of the corporation. One thing that you need to take into account is that directors are elected by shareholders. Who are the officers? An officer is generally the person that has been appointed to a particular office, such as the president, the treasurer, the secretary, the CEO, the CFO. These people are the ones involved in the day-to-day management of the corporation, and they are elected by directors. And finally, the shareholders. The shareholders are going to be an individual, a company, an institution that owns at least one share of the corporation stock, which is also known as equity. The shareholders are basically the owners of the corporation. And because shareholders of shares that carry voting rights, they can exercise control over the corporation through their votes. So just to put a picture to you to imagine, the shareholders are owners of the corporation. They are going to elect directors. The directors are going to be in charge of managing, of supervising, of overseeing the activities of the corporation, and they are the ones electing officers. The officers are going to be the ones taking care of the day-to-day activities of the corporation. So I hope that's clear.
Maria, can we stop there just to ask if people have any questions so far? Because I think it has been a lot of information up to there. I don't know, guys, you're attending this session. If you have any questions, you can post it in the chat box about the topics that we have. Because after this, Maria, you're going to phase 2, right? Raising capital?
Yeah. I'm going to mention briefly.
Sounds good.
Yeah. So now,
yeah, Pranit has a question.
Which is the best province for minimum taxes and highest funding programs? From Pranit.
So I'll answer that, Marissa. So for Praneeth, in terms of the taxes, again, I think that's something that we would defer to the accountant for. It is publicly listed, so we could just search for which provinces have the lowest tax brackets at the provincial level. But I don't know it off by hand. That's something that I defer to the accountant who's doing or the tax specialist who's going to be doing their own webinar. And with regards to the funding programs, each funding program that's available has different requirements. Generally, it's available to any Canadian corporation, whether it's incorporated under the federal legislation or a particular province. But there are some funding programs that have more specific requirements. For example, if it's a specific Ontario program, it might be only available to Ontario corporations. So even for the funding part of it, it's something that we would have to look at the specific program. And there are also experts in funding. I don't know, Miriam, if you bring someone in that does funding.
The next session is actually about doing investment.
Okay, perfect. So, well, that's angel investment. I'm talking more so about like the government funding programs. Do you do one on government funding programs?
That's under the bootcamp, but we are today in the Canada101. So this is the basics. In the bootcamp, we do have about funding and regarding grants and loans in the market. Yeah. Okay,
and like for example, we know that if we were back to normal, LatAm Startups shares office space with the Ontario Centers of Excellence as an example, which is an Ontario-based funding program that has very specific requirements in terms of what types of companies they will fund, both in terms of where they're incorporated, but also in terms of what types of businesses that they are currently funding. So it's a pretty specific question that I think you'll get more information on when you make it to the bootcamp program. And certainly myself or Miriam can make introductions to you guys once you come into Canada for specific funding experts, for accountants, for tax experts, that sort of stuff as well. Yes, thank you, Alan. Also, Pranit is asking if there is any minimum capital requirement for the incorporation. Well, there's the cost, the legal cost of incorporation, and then there would be your annual legal and accounting costs. So it's not that you have to fund the corporation with a particular amount of capital, although in order to take shares in a company, you technically have to buy those shares. Each shareholder has to technically buy the shares, but you can set the price per share of what we call a nominal amount, which is just some token low amount that like $1 a share or a cent a share or something like that has a very low value. But there are certain costs to starting a business. There's the cost of incorporation. There's the cost of getting a banking account. There's the cost of filing your corporate tax return, your annual corporate tax return. And for certain provinces and the federal corporation, there's also annual corporate law requirements as well. So there is a cost associated with it, but you don't necessarily have to fund the corporation with a certain amount of capital over and above the nominal amount that you buy your shares with. No.
Thank you, Alan.
Yeah, thank you.
Right. So I'm just going to continue right now with the last point, phase 2, raising capital. And just because this is a 101 introduction to how to incorporate in Canada, we're just going to keep it very simple. But when you are incorporating, when you're planning on incorporating your business here, you need to think long term. You need to think, am I incorporating this? Is this going to be a personal business? Am I incorporating a restaurant with my wife and just for the two of us to have a business? If so, you don't need to issue a large number of shares. You could do with issuing 100 shares, 50-50, and that's it. Let's keep it simple. However, I'm assuming that if you plan to expand your business to Canada, or if you want to incorporate a new business here, you are planning at some time later in the future to raise capital from investors, um, let's say from a government grant. So in that case, you do need to plan accordingly since the incorporation. So in that case, we would suggest our clients to issue a larger number of shares, let's say, for example, 1 million, 10 million, just because it's easier for investors to come in to the company and for you to say, okay, I'm going to give you 1,000 shares in the company. It's easier to split the amount of shares that you're going to give out to investors, to future investors. So this is just something to take into consideration before you incorporate, and you can always come to us if you have any questions. We will make sure to guide you well. And right now, T is going to finalize the presentation with some just brief insights on the Startup Visa program.
Thank you. So I understand that you already have your a little workshop about immigration, so I'm not gonna spend a lot of time on this, so we're not repeating ourselves. But we just wanted to call your attention to this program in specific, the Canadian Startup Visa program, because it is a program that we've been working with a number of startups on this, and we see that it has a lot of implications on how you structure your business. So we want to highlight to you how this may affect your incorporation. And if you're planning to apply under this program, if you think this is the right fit for you, just keep in mind that when you are establishing the business and the structure for it, you will need to take into consideration what are the requirements for this program. So talking just a quick overview, it was this program launched by Immigration Canada. It was launched as a pilot in 2013, so it's fairly recent that it became permanent in 2018. The focus for this program is for entrepreneurs that have the potential to build an innovative business in Canada that can create jobs, can compete globally, not only in Canada. And the outcome for people that are successful in applying to this program is that you can receive permanent residency to live in Canada. And for Canada, the idea is really to attract more innovative business ventures to come into the country and to innovate more here. The way this program works is that it is based on a model of partnership with the private sector. This morning, I was actually attending another event with a representative from the Canadian consulate in Brazil, and he manages the immigration programs there and was explaining a bit more on the view of an immigration officer to this program. And essentially, the way it works is Immigration Canada cannot really have the resources to assess if your startup has the capacity to become very successful, if your business is really innovative or not. They are focused on immigration, and they don't want to take care of understanding your business plan, see how you're going to work. So they are deferring all of this part to this concept of designated organizations. So you can have accelerators or incubators, venture capital funds, angel investor groups, which are designated by Immigration Canada. And if you show that you have support from one of these designated organizations, then you can apply under the Startup Visa program. So as an accelerator or incubator, which LatAm is one of the designated organizations, you need acceptance into their Startup Visa program. That will mean that they support your business, and with that letter of support, you can start your application. On the other hand, you can maybe receive support from a VC, from a venture capital fund. If they invest a minimum of $200,000 in your business, that means that they support you. And for an angel investor group, the minimum amount of investment is $75,000, which means that they give support to your startup and give you the go-ahead to start with the application. So LatAm is one of the accelerators, is a good example of that. We also have relationships with angel investor groups, and we see that the program is really working for international startups that want to come to Canada, and even entrepreneurs that have good ideas and the potential and resources to create a business here. So besides receiving this letter of support and all other immigration requirements like language, you're gonna have a background check done, as I imagine you talked about earlier. You have this requirement that you need a qualifying business. So for each business that will apply under startup visa, you can have up to 5 applicants. The business needs to be incorporated in Canada. And now going back to the discussion we're having about having a branch or having a subsidiary or an affiliate company, you will need to have a company that is really incorporated in Canada. So that's when the affiliate or related company is important here, because each person that is applying for this program needs to own at least 10% of the voting shares, and all applicants together, so the 5 of you, will need to own more than 50% of the voting shares to show that you really control this corporation, that this corporation is yours, and then you are the ones that are taking the decisions and managing. The way that this can get complicated when you have an established business in your home country and you're expanding to Canada is that if you go to the normal route, which would be to open a subsidiary here in Canada that is owned by your foreign company, you would not comply with those requirements here because the shares would be owned by the foreign company and not by the actual applicant. So for this reason, we were talking before about having an affiliate or related company which has common control. So if you plan to apply for a startup visa and you already have a business that is quite established internationally, you can set up a company in Canada which has common control with your foreign company, so the same owners, the same shareholders, as Marisu explained, and then you would be able to comply with the qualifying business requirements for startup visa as well. So this is what we wanted to discuss with you today, just some overview about a number of topics. I know it's a lot of information, so I think we have some time for questions. If you have anything that we didn't cover, or if you want more detail or anything, we're available for that. Let me open the chat here. So I see that Amir has a question. In order to apply for SUV, first we need to have a company in Canada, or after receiving letter of support, we can open companies. That's a very good question. So the way you see the regulations from Immigration Canada, they require a company that is incorporated in Canada, but they say that you can start the application without being incorporated and then explain the reasons why you're not incorporated at this point. For sure, before receiving the visa and being able to land in Canada as a permanent resident, you will need to have this business incorporated. But in terms of submitting the application, it is possible for you to apply even without being incorporated at this point, but you will need to explain why. From our experience, it's usually more attractive for the designated organizations such as an investor, an angel group, or even an accelerator to give you support once you show that at least you have an entity that is formed here in Canada, and you can show the ownership, you can show that you're going to comply with the requirements. Because other than that, it will be very difficult, for example, for an investor to be investing in you personally instead of investing in a corporation that is formed here and that has the structure with directors, shareholders, and all of that. So it depends on the situation. It can be possible, but from our experience, we usually see incorporated companies receiving the letter of support. Hope that clarifies your question.
Any
Okay,
other question, guys? No more questions? Okay.
Okay, guys, if there is no other question, this session has been recorded. So we are going to pass this session to all of you. So if you have more questions, we are going to pass information about OCL law. You can see here, you know, some of the information they have right now. If you want to know more about Startup Visa or programs, Perla just posted, you know, information about the programs. But in general, OCL law has helped us to incorporate companies here in Canada with other groups. So please reach them out if you have more questions about incorporation. So we have another session coming up. I think Anna Bertone has another question before we finish here, Tasiani.
That one's about LatAm Startups. Miriam, it's
Yeah, that's yeah.
Oh.
No, for the ones that we have provided letter of support, they have been incorporated already through the program because we have a very specific program about that. Okay, for what is the program in particular, companies go into different stages. They go from validation to soft landing, and then they finish in a Startup Visa program if the board of directors accept them. But by the time that they finish the soft landing, most of them are actually incorporated. So we usually don't send the application without the incorporation because sometimes it can be problematic, you know, if you know the company is not actually with business already running in the country. So we try our best to do that. There are other organizations that may do different. You know, there are other organizations that maybe give the letter of support without to have to incorporate in Canada. And our incubator accelerator, we do require to companies to incorporate during the process. So there is a previous process. There is not a direct process to enter to the Startup Visa program under LatAm Startups. We require the companies to go through that process. Hope that answered the question. But again, we are going to have another session in about an hour at 2 p.m. about the angel investment. And I hope to see you there as well. So any other questions, just please send us, you know, your questions to contact@latamstartups.org, or you can also contact directly OCL Law. We are going to pass this recording, and thank you again for coming to this session today. Bye now.
Thank you.
Thank you.
Goodbye.